Today I want to talk about the most important support level on Bitcoin right now that everyone needs to be familiar with. Now listen, it's no secret that the crypto markets pulled back across the board last week. We saw Bitcoin and altcoins alike drop by double digits, but Bitcoin especially fell to a very familiar face, being that $25,000 trend line. Now anyone that's been in the space for longer than a year and a half, you're immediately going to know what this trend line is and why it's important. But even if you don't worry, I'm going to spend the entire video today talking about why this trend line is crucial for Bitcoin to hold, what could happen if Bitcoin holds this area and how it could move back to the upside, or what could happen if Bitcoin breaks this $25,000 trend line and the downside effect that that could have on the entire crypto market. So if that sounds interesting, all that I ask is that you smash the like button, you smash the subscribe button, and without further ado, let's go ahead and dive on in and understand why this is such a crucial level for Bitcoin to hold. Now, if we zoom out just a little bit, kind of looking at what's been happening in the last 6 or so months of Bitcoin's price action, we can see that Bitcoin has been chopping around between roughly $31,000 to $32,000 on the high end and $25,000 on the low end, meaning that when Bitcoin goes up to $32,000, that's where resistance is, that's where the price is falling at. And whenever it comes back down to $25,000, that's typically where price is bouncing at. Now, we had this big sell-off last week where we thought Bitcoin would see a little bit of support around this 200-day moving average, or the yellow line on the screen here, and it didn't. It broke right through it. It was supposed to be a big support, and Bitcoin didn't even close a daily candle above it. It just tanked right through the thing. But Bitcoin fell back to this $25,000 trend line, and now we're going to really zoom out to get the whole picture of Bitcoin here. Now, this trend line started all the way back. I'm going to make sure my head's not blocking this. This trend line started all the way back during June of 2021, or rather actually May of 2021. And if you remember what this is the Terra Luna / UST crash. Now, Terra Luna and UST were two of the largest cryptocurrencies in existence to pretty much go from hero to zero. And although they're not technically at zero, they have lost like 99% of their market cap, and they're pretty much considered a dead project by everyone. And these were both like top 10 cryptocurrencies, like multi-billion-dollar projects that pretty much went to zero because of their founder, Do Kwon. So when this happened, this was the bottoming candle of that Terra Luna and UST crash, one of the worst crashes that crypto has ever seen. This was the bottoming candle, and it bottomed out at $25,000, marking a massive bounce because in a matter of just a few days, Bitcoin was able to rise around 25% in a few days. It rose even more than that, above 30% over the following weeks. But after this consolidation range broke, Bitcoin tanked down, and it used this former support level here as a newfound resistance. And so even though Bitcoin really bounced about 30% to the upside here, as soon as it turned into resistance, instead of bouncing towards the upside 30%, it rejected this level by 30% and then tanked 30% to the downside. Now, when Bitcoin came back up to this former support, now turned into a resistance, it hit this level again, tanked about another 25% down to that 200-day moving average. And now that we broke this level to the upside, even after a little bit of a rejection here, we have started using this trend line as a support again. So when I talk about all the history that's involved with the 25K area, or the 25K trend line, this is what I'm talking about. I'm talking about something that started from one of the most significant moves in crypto history that was a former support, turned into resistance not once, but actually twice, and then now it has turned back into a support again. So with Bitcoin retesting this level, using it as a bit of support for the second time here upon us touching this, this is a key level for Bitcoin to hold. Because if we look back, every time that Bitcoin has touched this trend line, it's bounced or fallen around 30% or so. And so again, I just want to kind of highlight this. When we bounced the first time, it was about a 30% move to the upside. When we rejected the first time, we fell about 38% to the downside. When we rejected the second time, we fell about 22% to the downside. When we bounced this next time, we rose about 27% to the upside. And so that brings us to where we're at today. If we bounce, who knows? Maybe we could easily do another 30% move to the upside, potentially even hit new highs or work our way back to the top of this parallel channel that we're in right now. But if we break, this could mean that Bitcoin tanks another 20 to 30% to the downside, bringing us closer to our cycle lows. So when we're looking at this level, there's a couple possibilities of what could happen here and what we need to be paying attention to on Bitcoin. Because whether you like it or not, if Bitcoin drops 20 to 30%, the odds are 99% of altcoins are going to drop by 20 to 30%, if not probably even more than that. So that's why we need to be paying attention to this level. Now, the good news is it can have the opposite effect as well. If Bitcoin rises by 20 to 30%, we could see Bitcoin leading the way, maybe Bitcoin dominance rising again, but that would also bring the altcoin markets up as well. It's not going to be one of those scenarios where Bitcoin rises by 30% and altcoins don't move. That's a very unlikely scenario. But those are kind of the two possibilities that I'm looking at. Now, in the immediate zone of Bitcoin, I want to zoom in just a little bit more and, talk about this little channel that Bitcoin is still kind of consolidating in, because as we mentioned towards the beginning of the video, Bitcoin had been playing a game of ping pong in between support and resistance and just bouncing around inside here, squeezing a little bit. But with this 200-day moving average breaking, the immediate thing that I'm looking for in a bounce on Bitcoin is that saying basically, hey, if this support holds, the immediate area that I'm looking at is this 200-day moving average. I am watching very closely here to see, does this 200-day moving average break? Does it hold? Does it turn into a rejection point? Because that's going to tell us a lot. So the major moving averages and the major resistances that Bitcoin has to the upside is that 200-day moving average around 27,300 to 400 area. And this is something that I'm really hoping doesn't turn into a resistance, but it is quite, a major level that Bitcoin should have used as a support, and it didn't. And typically when the price of Bitcoin is below this 200-day moving average, that means it's often going to be a resistance or a rejection point. Now, it also has the 20 and 50-day moving averages, which I'm really not as much worried about, maybe a little bit about the 50-day, but I'm not too worried about these guys because Bitcoin has been chopping around here between the 20 and the 50 for quite a while now, so I don't think those are going to be any major threats to holding Bitcoin down. I think the biggest threats right now are if this 25K zone breaks and if Bitcoin rejects this 200-day moving average here. So those are really the things that I'm looking for. And if Bitcoin is able to break back above this 200-day moving average, I think there's a good argument that Bitcoin could be going up towards the top of this parallel channel range, maybe up to the low 30,000s and potentially even a little bit higher than that. Now, some of the things that we have seen on things like the MACD and the RSI is this was the lowest level on the RSI, on the daily RSI, that we have seen since the COVID crash of 2020. And that was a nasty one. That was one that brought Bitcoin down to about $4,000, I believe it was. And it was a really, or was it 4,000? I think it was around 4,000. But we can go all the way back and kind of fact check that. But it was a nasty one nonetheless, right? It was a really nasty crash. Yeah, it was about $4,000. And so this is the lowest level that we've seen on our relative strength index since that COVID crash. The only difference this time around is that instead of being $4,000, the price of Bitcoin is like $24,000 or $26,000, even higher than that. It's over $20,000 higher than when the RSI was at this point last time. And so it goes to show you that Bitcoin has really come a long way here, and there's been some good things that have happened. And historically speaking, the other thing that I want to just briefly check out, and I didn't look at this beforehand, is things like the weekly and the monthly RSI. And it's very much still in a very neutral territory, which doesn't have me too concerned really at all about Bitcoin here. So nothing too much to sweat over here. In fact, this kind of movement, whenever Bitcoin has been at this area previously, it has typically marked the best buying opportunities. Relatively speaking, it's marked some of the best short-term bottoms and buying opportunities on Bitcoin's chart. So I can't give you legal, financial, or tax advice or anything like that here. But what I can do is simply bring all the information to you and let you make your own educated decisions from there on out. So this is what I'm looking at on the Bitcoin chart right now. This is what I'm paying attention to. There definitely are some things happening that everyone needs to be made aware of. And the one thing that I can say walking away from this is that if you're not using stop losses here, you're at a disadvantage. This was a trade setup that I had on Ethereum, and guess what? I had a stop loss right below the 200-day moving average, also right below the side of this pennant, the bottom side of this pennant or symmetrical triangle, saying, hey, I'm going to buy at support, and if it breaks, I'm out. And that would have stopped me at around 2.8%, and that would have stopped me from losing how much Ethereum would have kept falling, which would have been another maybe 14-15% to the downside. And so I say all this just to show that, hey, this is a choppy zone. You're probably going to get stopped out of some altcoin trades here. But stop losses are really going to be your best friend in volatile areas like this one, where if the floor falls out, price is going to be very likely to tank in that direction. But also for all those momentum traders out there, because I'm sure they're having a field day with this, going, hey, a breakout or breakdown happens, and they're having the time of their lives riding these things because it's moving just in a single direction, and moves like this aren't too choppy. And there's not a lot of fake outs. So hopefully this video helped it out. Hopefully you found it insightful. If you did, all that I ask is that you smash the like button, you smash the subscribe button. I want to give a quick shout out to our Crypt Nation members out there, because they got all of this information early in this week's newsletter. So if you are a Crypt Nation member, make sure you check out those newsletters, because we give you all the information that we talk about here early, especially when it comes to like Bitcoin analysis and things of that nature, in those newsletters at the beginning of every week. So thank you for tuning in, everyone, and we'll see all of you in the next video.